Hi, everyone. I'm DeFi Dad. You're watching episode 36 of Yield TV. Okay, hey, everyone. It is Friday, November 20th, 2020. And today we are going to talk all about how to explain DeFi to your family at Thanksgiving dinner. It's really actually inspired by what I saw Laura Shin do in 2017. I was new to the space. She released an episode of Unchained, and she had a number of folks on the episode, and it was really helpful for me to actually learn more about how to explain crypto to my friends and family. And so today we're going to have Jan Liberman talk with us. He is the founding partner at Delphi Digital. So just some background on Delphi Digital. It is a research-driven firm dedicated to advancing the understanding and development of the growing digital asset market. That means they produce institutional-grade research. They produce, in my opinion, some of the best research in crypto. I have personally never chosen to subscribe to any other research other than Delphi. I've been a subscriber for, I think, since the beginning, a little over 2 years, and I have learned so much from the team. Aside from the fact that you might know Tom Shaughnessy, who has a podcast called Chain Reaction. It's now called the Delphi Podcast, so you should check that out as well. And then also recently, Delphi launched their own fund. I think it's safe to say your guys' research was so hard hitting and was providing such hard-hitting insights that you all were putting your money into the market and realizing you should run a fund. So Delphi Ventures is a thesis-driven, high-conviction fund that opportunistically invests in new technologies, leveraging decentralized networks. Okay, on that note, Jan, welcome to Yield TV. How are you doing?
Good. Thanks for having me. Excited to be here.
Yeah. You're like, man, no one shills Delphi harder than Delphi Dad.
Honestly.
Delphi Dad. That's what I should rebrand as, is Delphi Dad. So yeah, going back to what we'll talk about today is all about how to explain DeFi to folks that may or may not have experience with crypto. I think there's lots of different profiles of potential users. Also, that's dependent on where you live in the world. But since Thanksgiving is generally celebrated in the United States, I guess we'll be catering to the folks that live in the United States. So, Jan, before we get started on this, could you tell us a little bit more just about like your background before you founded Delphi Digital, and maybe just a little bit more about the highlights along the way over the last 2.5 years with Delphi?
Yeah, no, absolutely. So prior to Delphi, I worked in traditional finance, more so in equity research, and then afterwards in leverage finance, and got into crypto. Unfortunately, not as early as I would have liked to, which I guess everyone kind of says that unless you were really early. But started investing in the beginning of 2017. Just kind of got in as a casual investor. Heard about Bitcoin prior to that through Silk Road and kind of just hearing about it through different channels. But unfortunately just didn't invest. And then in the beginning of 2017, started investing and started really seeing the opportunity. And I was at the time working with some of the guys that I founded the company with now, specifically it was Anil, Kevin, and MJ. And so we spent basically an increasingly large amount of our time just focusing on this market. Initially, it was to understand what was going on, and then once things started really heating up, it was all about figuring out what's going to happen, what's going to move markets, just trying to make as much money as possible. And so this was throughout 2017, and we realized that we're spending more and more time on this, and we wanted to kind of do it in a professional capacity, but we weren't necessarily sure how, just because it was harder to focus on our day-to-day jobs when this was around. And so we kind of thought about what was the best way to leverage our skill set to join the space, and we figured starting a research firm would be the way to do it. And so we started in August of 2018. The kind of the bear market the blow off top happened, and you have 2018 just pretty prolonged bear market. And so in August we launched with we bootstrapped it ourselves. We just got a WeWork and started going to work. And so that was pretty fun, where you have your money set aside. This is like the capital you burn through, and you just have to kind of make it work, or also just start making money. And so the research business is subscription by nature, so it's hard to immediately scale. So we had started doing the consulting on the side as well, and the consulting was primarily us kind of functioning as like an outsourced due diligence team for certain funds, where they would ask us to look into a certain sector or a certain aspect of the space and come back with potential investments. And so we were doing that while doing the research, and we're not really traders by nature. So, we would publish short-term outlooks using different on-chain data or various, any kind of data points we can put together. But we think our bread and butter was really the fundamental side. So we had, like, while also still pretty early and DeFi was still early, we were just looking around for what kind of had fundamental value and what made sense. And at the time, DeFi was still basically the only thing that can really draw any kind of value, because it was enabling speculation and leverage, and so you had immediate product market fit. And so that's kind of where the research took us. And then over time, we got a better and better understanding of token econ and kind of how that all worked. And so the consulting then evolved into working with projects to work on their token econ, whether they were a new project or something that was already existing and kind of needed potential edits or any kind of consulting help there. And that really kept evolving. And over time, we realized what we wanted to kind of be more than just pure mercenaries on the consulting side, and really wanted to kind of get involved with these projects on a deeper level, invest and offer those same types of services, and just be a more value-add investor. And so in June, July, basically we launched Delphi Ventures, where now we look to actively invest and we take long-term positions and work with projects to try and offer our expertise where possible, but really trying to be just the most value-add investor we can.
Yeah, I recall the trends, that shifted with your research over time, because, there's always been, I think, really like hard-hitting research on Bitcoin, just because of the institutional grade investors that you would work with. But then I do recall like really starting to notice more of the research shift to what would be some of the big brand names in DeFi. And gosh, like I gotta say, like I discovered synthetics because of you guys. Like I knew the name, but I never understood what the heck it was. I did know what Kyber was, but I think I understood like the tokenomics better after I read that report. Uniswap, you guys did a report on impermanent loss, and I remember reading that and being like, I finally understand what impermanent loss is. But anyways, I could go on and on about the research angle. It's been fascinating to watch. Can you talk a bit about the fund? Just what you guys focus on. You've made a number of investments, which we're proud to be one of those at Zapper. But curious to talk just a bit about your theses before we actually hop into this DeFi conversation.
Yeah, I think at a large level, they're pretty comparable with most crypto venture funds, where you believe in the decentralization and kind of the different ways it can be applied, whether that's through finance or Web3 and kind of all of those different narratives. But realistically, it's also just understanding the timing of those narratives and kind of what you need for some of them to play out, and understanding the product market fit that they might have. And so I'd say, like most, most of our recent investments have been in DeFi so far, where it's where we see the most product market fit. So we kind of look for projects that have a bit of a moat, have a real value add product that we think we can add some value to as well, and ones that can continue growing and do have a large target market that they can address, both within the space and without. And I think part of what helps make DeFi a lot safer of an investment is that some of these other ideas are a bit conditional on the space really growing where,
Yeah.
so, the risk of the execution kind of compounds, whereas with DeFi, they can find immediate product market fit and enough to drive fundamental value. And so we do find that definitely appealing. But it's really interesting to see how it's evolved, where a lot of I think like the original or the pillar primitives have kind of been established, whether it's through borrowing and lending or synthetic derivatives and kind of along that spectrum. And so now you're kind of starting to see how things are evolving on top of that, and understanding where that market can go. And so that's why I think like DeFi derivatives are a big place to be right now, and I think a lot of people are looking there and trying to understand, with regulation starting to clamp down, not regulation, but just KYC, rightfully so, starting to clamp down on certain areas. People are looking to have these exposures in a decentralized KYC-less way so far. That's not to say that won't change, but I think that's where the puck is kind of traveling to right now. And so we're really trying to understand that space a bit more. But I'd say in general, it's been primarily DeFi. We're obviously big fans of Axie as well, and we think gaming is a natural onboard for a lot of users. If you think about just like the target demographic of gamers and kind of what they're comfortable with, it's a very short jump to crypto. They're digitally native, tech savvy, and so we always were bullish on gaming, but some of the original choke points were throughput, and some of the games were just purely built on chain, which you can't do because then you constantly using gas and it becomes prohibitive. Whereas certain other games don't necessarily need to be purely on chain, where it's the ownership of the assets that's on chain. So like in Axie, where they can be successful without scaling, but the scaling will obviously help them immensely as well. And so that's certainly one we're really bullish on. And yeah, we're trying to, like, gaming is still really early, but we do think that that's a space we're looking to go. And there's a few others that we're also looking for in the space, but not in a pure gaming way. It's Yield Guild is basically it's almost like a Wi-Fi for gaming, where it aggregates gamers and users and kind of creates an entity through which you can basically connecting this user base of gamers and creating a community there, but also basically inherently having its own marketplace and assets that it can provide gamers to play, because there's a lot of play to earn type of situations, especially in developing countries, where a lot of these players are making a living already playing just from farming certain assets. So basically you can through this really enable a lot more of those players to participate, and I think you're making that market more efficient, where you do have a lot of potential users that can play, but they don't necessarily have the understanding or the assets to use to play. And so this network kind of allows that gap to be filled. And then conversely, it also appeals to the higher end gamers, where you can kind of create very competitive guilds and unique ranking systems. And so for future games at the same time, they are going to want to partner with Yield Guild, because you can immediately onboard a lot of new users to your game. And so we think it's definitely a pretty symbiotic thing for gaming in the space.
Yeah, there are some really clear examples of this, of these symbiotic relationships. Like I think about in some of the most simple use cases in DeFi, I think about those like in Argentina, just because I've met a lot of people in Argentina who want exposure to DAI and have exposure to DAI because they're escaping some pretty awful inflation with the Argentinian peso. But then you call out some other like really, I think, obvious examples to me, but I like have to remind myself, like, just because we're spending so much time in this space and working full time, it becomes more natural to understand that in a bull market, let's all agree that we're in a bull market now, or we're at the start of a bull market. People are going to want more and more exposure, and they want to, I think in some cases, watch what they hold continue to grow, and also hopefully take on more exposure as prices go up. And so derivatives make a hell of a lot of sense, because if you can suddenly deposit Ether into like a DYDX perpetuals market or Monte Carlo DEX or Future Swap and all the other ones that are coming, it's exciting. You no longer have to submit to a BitMEX. BitMEX created the market, but I think like we all know the risk that's involved there, juxtaposed against really what is smart contract risk in DeFi. And then gaming, just what you were calling out about gaming. It's so natural, as you pointed out, like these are folks that are digital natives and are less afraid of some of the friction points in our UX still. So yeah, Axie Infinity we had on recently, and that kind of blew my mind, like how powerful their community is right now in terms of the cohesiveness and just the sort of like commitment they all feel to one another in using Axie. Jan, let's go ahead and hop into this like Thanksgiving oriented conversation. So we're gonna try to explain one of many ways to help communicate what is DeFi and to, I think, answer some of the common questions that you can expect at Thanksgiving dinner. Now, there's no doubt, I think it's more likely you could get questions at Thanksgiving dinner like, why is Bitcoin going up? That's the one that I've most commonly found at every like family dinner. But I really have found that as I've tried to explain DeFi, it resonates more because they recognize the use cases, even though Bitcoin itself is really a DeFi use case as a store of value. So Jan, maybe you could kick us off with, I feel like this is the hardest question of all. Let's pretend your uncle leans over and, what is DeFi? What's this DeFi thing, Jan? Explain it to me. How do you explain that?
Yeah, in the simplest way, it's basically a way to recreate financial services and offers that exist, basically financial services that exist in the world today without needing an intermediary. And so it's rather than user intermediary, it's user to user. And so you're basically combining users that have different demands or different desires, but they happen to be productive with each other. And so you're basically able to solve two wants by bringing them together and cutting out, the rent-seeking middleman to an extent. Okay,
so I'll continue to play the uncle. I don't get it. So what do you? I said I'll continue to play the uncle role. I don't get it, John. So what do you do in DeFi? Like what can you do with your money in DeFi?
Yeah, so I mean, I guess the easiest way is kind of to go through the trajectory. It's it started in the simplest way possible. It's just borrowing and lending. Well, initially it started with, I guess, Maker's one of the earlier ones where it's just borrowing against your own collateral, and so that was the kind of the initial way. And then you started to see these borrowing and lending protocols where you have users can deposit different assets and they supply them to the platform, and then you have other users that want to borrow these assets, and so you have to maintain a situation where you still have over collateralization, so you can only borrow typically up to half of what you've deposited, but you have a situation now where you can deposit assets that you want to keep your exposure to, and at the same time borrow something else, whether it's to express a short or just to have extra ammunition if you want to lever up to an extent, or just have capital without really needing to sell your underlying exposure.
I'm like smiling because there's so many questions that I've answered with my family, and like as you're explaining it, like I'm like remembering them saying, so Jan, why would I deposit more money than I can borrow? That doesn't make any sense. Why don't I just borrow from my own money? Why would I have over collateralized borrowing?
Right.
Anyways, yeah, I could go on with that. I just wanted to add on to some of this. I think that one of the things that I try to do with family is there are the elevator pitches that I give, kind of like what you were just giving, Jan, about like this is peer-to-peer banking. It's banking without a bank, and it's all automated by software. So think of it as actually another common conversation will go down is, do you know what Bitcoin is? And he's, in most cases they're like, yeah, I kind of get it. It's digital money. I'm like, yeah, okay. And no one controls it. It's really powerful because it's censorship resistant. And at the end of the day, it as like a digital gold, you can easily transfer it anywhere across the world. DeFi kind of plays off of these principles. It is meant to be automated money software. It's meant to be censorship resistant. It's meant to really mirror a lot of the most powerful use cases in traditional finance, like lending or saving your money to earn interest, taking out a loan. And then there's even more sophisticated use cases like you can trade derivatives or trade options. But what I really want to call out here, and what we could talk more about, is the different user profiles in DeFi. So a trick for anyone, if you've never worked in like a sales role, is you actually should ask lots of questions. And so let's assume that you don't have to launch into the elevator pitch. There's lots of questions that you can ask to learn more about how someone thinks about money and banking, and whether they know what Bitcoin is already, whether they know what crypto is. These are totally different profiles where you can start to dig in and explain what is DeFi. So Jan, can we talk through like what are some of the profiles of users that you think about in DeFi?
Yeah, no, it's a great question. I think that's one of the really unique aspects of DeFi, is that you do have all of these profiles, and it's about figuring out how to organize them in a really productive way, so that what someone else is looking to do is actually benefiting what someone else is looking to do. And so the idea, to break down some of these profiles, you have users that just want to earn, like if we're talking on the lowest end of the risk spectrum, you have a user who owns stablecoins who just wants to earn interest on them. And so, and especially in a world where interest is hard to find, you have a situation now where you can provide your stablecoins and you don't even have to borrow anything. You can just provide them, and somebody can pay you to provide them. And so, here you have somebody who's on one end of the risk spectrum, and you can have somebody else on the other who is a degen who is depositing, basically somebody who wants to really speculate, and they're depositing some other assets that they want to keep their exposure to, but they would like to go long or have access to capital. And so you're combining, you're matching the needs of somebody who just wants some interest on the safe capital that they own, and kind of providing that somebody who's on the completely opposite end, and you're combining it in a very productive way. And so if you think about the situation where in a regular bank, the issue, not to say a regular bank, but even in situations where there is an intermediary, oftentimes the intermediary then has to take a bit of a fee, and that makes both markets less efficient, in that the borrower probably has to pay a little bit more and the lender will receive a little bit less. And so by removing that user, you're making markets more efficient for those individuals, and each of them kind of benefits. And so when you can aggregate all of these types of players on a large scale, like that's where things really start to take off, because it's tough to aggregate when you have a few users, but when you have a very wide variety, you can organize these systems in a way that they'll specifically match up. And I think what happens is it becomes more efficient as it grows, because you're able to really match the individual desires of users. And so, back to the original question of other profiles, I think the interesting thing is the stablecoin depositor. So it's almost like a subset of a profile, where you have a certain action, and then you'll have profiles that fit that action, meaning you can have somebody who's depositing stablecoins, but it could be someone in a country that doesn't necessarily have access to digital dollars. It could be someone who thinks the market is overheated and wants to take risk off. It can be, there's a wide variety of users that can fit the bill of somebody who's doing that action. And so I think that also makes the organization of all these users a lot better, because it's not that you have 1,000 different users with 1,000 different wants. It's 1,000 different types of users, but their desires can be expressed in a handful of exposures. And so it's more about matching those individual exposures that makes things interesting.
I mean, even like when you think about stable coins, so in the last few months, I interviewed Mariano Conti, who lives in Argentina, and then Aiken Sawyer, who grew up in Nigeria. Both of them talked to me about, inflation and capital controls in Argentina and Nigeria, respectively. And when you get outside of your bubble, which a lot of like my family, since they all live in the United States, I would argue they're kind of unaware of these capital controls. When you realize that your own currency, if you could imagine the US dollar experiencing 60% inflation in a year, suddenly a gallon of milk is becoming more and more expensive. It's like a sinking ship. You get your paycheck and you just want to get out of this like awful currency. But then on top of it, you have a government telling you that it's worth X, and you can literally go on the internet and look up and see that it's worth something completely different, that your government is actually lying to you. So that exposure to a stable coin is really, it's a life raft for many people across the world. So this becomes one of the most basic use cases in DeFi is you have, I don't even go into like whether it's decentralized or whether it has some centralized risk with like a USDC. Just call it a stable coin, call it a digital dollar. It allows someone to escape currencies that are not performing well and to be able to sustain some wealth and have a medium of exchange in some cases where you can, potentially pay someone money across the world without having to go through middlemen services that are maybe blocked by your government. So we have that one. Going further though with stable coins, I think about a profile of someone who is less, or what I want to say, more risk averse, and maybe they live in the United States, and they've got cash sitting in the bank. And right now, savings rates are deplorable in the United States, at least. If you can take those dollars, turn them into digital dollars, and be able to lend them in DeFi, well, now you're lending your digital dollars, and you're earning really high interest rates in comparison to what you would get from a bank. I mean, I remember during the spring when the markets were crazy, explaining to family and friends that I was earning like 10 or 20% in stable coins at the time. That is an outrageous use case within DeFi. And it's one that I think we all tend to forget about because we've seen higher rates with different DeFi applications launching. Don't forget that 10 to 20%, 5% on dollars is an insane opportunity for most people.
And I think that also helps make the capital in DeFi very sticky too. So, if you have exposure to different crypto assets and you decide to sell, but you don't necessarily need the cash, it's just a lot more reasonable to sit in, stable coins. And obviously there's a non-zero risk if something happens, but if you think about something like, with USDC and some of these others, they are relatively safe. And so I think it helps keep capital in the space, and which, in that sense is a really good way to continue helping this space really accelerate. So you're trying to bring in as many new users as possible, and that's going to naturally happen because the demand for these services certainly exists, and it's all about trying to figure out how to really onboard these users and get them in. But at the same time, I think the capital is also very sticky, where if you don't necessarily need to spend that money, it's better off that you just sit in stables in the network, and oftentimes they're not sitting idle. You're earning interest because someone else wants to borrow, and it kind of makes the flywheel go around, basically.
Jan, what about the family and friends who have exposure to some crypto already? 3 years ago they bought some Bitcoin, they left it in Coinbase, and have kind of not paid attention since then. I actually know quite a few people like this who have recently been texting and are like, what's going on? Why are the prices all going up? Because if anyone listens to this or watches this in the future, it's Friday, November 20th, 2020. And the price of Bitcoin today is like $18,500 US dollars. And Ether just went over $500 for the first time, I think, in 3 years. So anyways, Jan, what sorts of DeFi opportunities can you relate to folks who are already in the crypto space? Maybe they hold Bitcoin, maybe they have some Ether.
Yeah, I'd say, realistically, those users aren't going to be power users, and they probably want the simplest, most digestible thing they can do, and that's basically lending out your assets. Because otherwise they're going to be sitting idle, and so if you don't plan on doing anything with them, you might as well earn a yield on them. And so with Ethereum, it's obviously a bit easier since it's native to all of the applications that exist. With Bitcoin, that's been a fun kind of situation to figure out, where you have these different types of proxies, where you have your wrap Bitcoin, where the trust is with BitGo. You have Ren BTC, where the trust is with the nodes that support that network. And so everyone's kind of looking for solutions. And one of the names that we invested in was Thorchain, and part of the investment thesis there was their ability to bring assets onto their network but keep them on their native chains. And we thought that was a really appealing way to kind of figure out how to make that work. And so the fact that you can continue to own Bitcoin natively but earn a yield on it in a different way. Granted, that exposure is a bit more exotic in the sense that you have you're in an AMM where you're in a 50-50 pool of Rune BTC, so that might be a bit much for some of the early users, but in terms of just trying to understand even what an AMM is. But yeah, oftentimes the borrowing is lending out your assets is by far the easiest way to kind of generate some return without having to do much.
I think that's it. It's letting your money work for you, and just simply explaining that if you hold an asset and you want to continue to hold it, the fact is that now there's automated lending out there. And I actually, this isn't financial advice, but I find that DeFi lending, I sleep better at night lending in DeFi than I did with like a BlockFi or Celsius, because it goes into a black box with them. And those are two reputable companies too. If I don't want to custody my own funds, it's kind of a no-brainer. I might as well use the centralized service. But for me, since I am comfortable holding custody of my own funds, I am more comfortable being able to verify where my funds are and knowing that they're in Compound, and knowing that there are smart contracts, or just, let's throw out smart contracts, a terrible term to use with new folks, knowing that the software will automatically liquidate borrowers who do not maintain their loans to protect me as a lender. I'm a hell of a lot more comfortable lending with DeFi. So Jan, this leads me to another question of, this is a really common one that comes up. How does DeFi differ from my experience using a crypto exchange, or what we refer to as centralized finance? I have a lot of friends and family that, again, like, they bought a little bit of Bitcoin, maybe a little bit of Ether. They're holding it in like a Coinbase account. What's the advantage of using DeFi over the crypto exchange?
Yeah, I think the first thing is that you do maintain custody of your assets. So that's a big one in terms of the custody itself, but also the ability to figure out, or not, the ability to kind of leverage it in as many ways as possible. Where if it's sitting in your, we'll just use it for example, if it's sitting in your MetaMask, it's very easy to use it directly in almost every protocol, or basically everything. Whereas with DeFi, you're limited to the options that are provided by that platform, and oftentimes, even just moving it off the platform, you need, because it's you're not custodying it, you have to have 2FA, you have to link it to an email, you have to go through KYC to remove withdrawal limitations, and it becomes a lot less fluid and a lot more limited, I think, on the centralized platform. And the trade-off there, it's comfort and kind of how much you want to dip your toes in the water, because I think the biggest, or one of the bigger advantages of CeFi is that you have a fiat on-ramp. And so oftentimes new money that doesn't really want to go down the rabbit hole too far just stops at the location where they brought the money on in the first place. And so the biggest advantage, though, is that the next step, incremental as it is, will offer up a lot more optionality to what you can do with that money. And so the move from nothing to the centralized exchange is materially more complicated than the move from CeFi to DeFi. And then, so it's like, a very small move, but it opens up a world of possibilities. And so
that's really good, I think, Jan. I've never thought about it that way. You're right that if you're already exposed to crypto, it is such a minor move compared to, I think, the mind-blowing nature of going from traditional finance to like, what is this thing, Bitcoin? What's Ether? Like, what's the point of these decentralized networks? It's a lot to take in.
And I think realistically, sorry. Yeah.
No. Go ahead. Yeah. What were you saying?
I was going to say, realistically, I guess to some extent, we probably downplay the self-custody aspect, but I mean, in reality, if it's sitting on your MetaMask, you have a password in your MetaMask, it's operationally not that different. If you lose your seed phrase, or somebody gets control of that's an issue. But I think the hacking aspect, unless somebody has the keystrokes and they figure out how to get into your MetaMask and somehow get in your seed phrase. But realistically, the from an operational side, it's pretty much the same. Like you're self-custodying them, but nothing really changes that much. So but that's not here nor there. Sorry.
Yeah. I think the most crucial thing about DeFi is you got to manage that seed phrase. In centralized finance, let's assume you're not holding your crypto in something like a ledger. If you hold it on an exchange, which is not a good idea, if you do that, you basically have someone like looking out for you. But at the same time, exchanges fail, exchanges have hacks, and that's why, I don't know, at the end of the day, I've always felt like DeFi is sort of realizing the original cypherpunk dream that was Bitcoin. Bitcoin itself is still very powerful, but when I see and hear people like shilling like reference or referrals for exchanges, it makes me sad, because it's like, why like you're kind of defeating the purpose of holding Bitcoin if you're going to go use it on a centralized exchange. Okay, I got one last major question for you. So if I'm interested to get started with DeFi, what tools do I need, or what might you recommend for me to get started with my DeFi journey?
Yeah, I think the first thing you need is obviously a wallet, and that's going to be MetaMask is going to be the easiest way, and it's just a place to basically store all your crypto, and then it functions as a plugin on your browser, so it's very easy to access. After that, I think using some kind of an aggregator or a Zapper type situation where you're able to have access to
use Zapper. Right. Yeah, use Zapper to track your
absolutely no.
Yeah. This whole episode was building towards me just getting you to say use Zapper. Sorry. So by the way, so you were saying with wallet, I just want to add really user-friendly wallets are Argent. Dharma is another one as well. I will attest to the fact that I've had multiple family members download Dharma, hook up their bank account, and mines were sort of blown by how easy it was. And then they saw that they were earning interest. At least that was back when they were able to earn interest through Compound. I'm not sure what the DAI savings rate or the DAI rate is now on Compound. Okay, back to you, Jan. You were saying we've got Zapper to track our DeFi portfolio, a DEX aggregator, which at the end of the day should replace us all using something like a Uniswap. Don't go to a single liquidity source when you can use a DEX aggregator like Zapper Exchange if you use Zapper already, but also 1inch. You've got Paraswap, you've got Dex.ag, which is rebranded to Slingshot. These are fantastic tools to be your search engine for the best trading rates in DeFi. Anything else though, top of mind that you'd recommend for like maybe like for them to like what use cases they could get started with, where to lend, how to learn about DeFi?
Lending is yeah, the three main ones are Aave, Compound, and Cream are basically the easiest places to really lend your collateral. And so like we mentioned earlier, there's a lot of different products that you can use, and so the value of these aggregators is that they simplify that next step of choosing what to do, and most of the time most people don't even know what exists and what doesn't, just because if you're not in this full time, it's just impossible to keep up with it, and it's unreasonable to expect that you'll be able to. And so that's why these aggregators have a lot of value in terms of bringing users into the kind of the next step and getting them more comfortable to understand what the possibilities are, and some of them really make that easy. And if realistically, if you have your assets and you want to generate a yield off of them, the easiest thing is to kind of move them into the wallet, one of the wallets described, and then supply them on one of these three lending platforms and start generating a yield. And the yield you generate is just based on the demand for that asset on that platform.
I think this is good. I think we can actually stop there. I would remind everyone, you can clearly see it's hard to explain this stuff when you're talking with someone who has no exposure to crypto. And, I just want to end with, one of the key takeaways is if you want to engage friends, family, strangers talking about DeFi, you should start by asking lots of questions. No one wants to hear someone, go off and ramble on a soapbox. Like, it's better to ask lots of questions, be genuinely curious about their background with money and banking, and just what do they know about it? And you'll start to see little pieces that you can sort of pick apart. If they're hung up on the fact that their savings sucks at their bank, hey, that's a great way to explain, or that's a great launching point into, this is how DeFi lending works, and this is why the rates are actually higher. But Jan, anything else you want to share? I know you've got to head off to another call, and just want to make sure we get you off on time here.
Nothing. No, nothing too specific. It's just it's exciting to see things continuing to kind of grow. User adoption is continuing to pick up, and I think we're kind of past, because the yield farming craze is a bit scary. You can start to wonder about sustainability, but as expected, you have to have a blow off top and then a sell off, and so now we're in a kind of a much more sustainable rally with everything slowly grinding higher, and a lot of it is spot driven. So I think the market's in a good spot, and it's exciting to see.
It feels like the market refocused. We had a sell off for a few months, and I've just noticed that there's been an explosion of more and more quality projects. You have like a Hedgic with options, on-chain options. It's not perfect, but it's pretty remarkable, the success that it's had. But then the thing that was cool to me about Hedgic options is that you couldn't stake with them unless you had an enormous amount of money. So what happened? People in the Hedgic community were like, hey, I can build staking pools for that. And now we have hedgicstaking.co, and Zelot Finance, I think, is the other one. And that's just another example of the composability in our space, which is, in layman's terms, it's the network effects of what's happening, what's being built, and the fact that everyone is able to stack, these money Legos on top of one another. So before we go, just want to remind everyone, you can follow Jan on Twitter. Make sure you follow Delphi Digital as well. And the profile that we left off, which I think is easier to explain crypto to, is someone who's already working in traditional finance, is a more sophisticated investor that, again, someone who might have even worked on a trading desk. Tell them to go to delphidigital.io. That's my recommendation. They can learn a lot there. Also, send them here to Yield TV. Maybe watch some DeFiDad.com. But those are the folks I feel like who connect the dots a little bit faster, just because they understand every nuance of the financial industry. So Jan, just thanks so much for your time. Really appreciate you coming on. We'd love to have you guys back. Please tell the rest of the team I said hello. And yeah, everyone, just a reminder, we'll be back on Monday with another episode. It's likely going to be with, I think it's Lisa Tan, who is an analyst in the DeFi space, a tokenomics expert. We might even have some folks on who won the recent ETH Global hackathons. We'll see what happens. But anyways, everyone, have a wonderful weekend and stay safe, and we'll see you soon. Bye.